At the tone, please record your message. One for more options.
Alright guys, welcome back to Roxum TV and also welcome back to Jam Crypto. Whichever platform you're watching on, I hope you guys are having a fantastic day. As for Bitcoin, it's kind of indecisive because what happened yesterday compared to our yesterday live stream is that we have a little bit bullishness and also a little bit of bearishness. Well, we know that, first of all, we have the confirmation from Jerome Powell that QT is coming to an end, and it has ended on 1st of December, which has been yesterday. So it should be a really good news, right? But like last night, of course, Hong Kong time, what happened is that we crashed down to 83K. So that's very interesting. What are the bearishness that we have, I wonder? Well, it turns out the Japan carry trade is on the top again, and then it's sending so much FUD to the market. Yet again, it's quite similar to what we saw last time, because like it's actually nothing new, but like it's recycling the FUD. And the second FUD that I spotted, and a lot of people are talking about that on crypto Twitter, is MicroStrategy. So MicroStrategy, the CEO came out and say, well, it's possible that they could sell the Bitcoin holding. Well, I thought MicroStrategy is a ultimate Bitcoin bull. Why would they come out and say a statement like this? Of course, we're gonna dive into MSTR. What sort of thought that we have? Should we be concerned right now? Should we be de-risking? And especially now that from a technical standpoint, we are officially in the bull market already. So anyways, there's actually a lot to dive into in today's show. So without further ado, let's hop onto the Bitcoin chart and do some analysis before we dive into the Bitcoin carry trade and news analysis. So today I want to actually start with the 2 weeks chart, and then we're slowly gonna dive into weekly and then daily because I want to look at the higher time frame instead. So in the 2 week chart, one thing very interesting is that, well, we gonna close the 2-week candle. So here, we are still on this candle. We haven't closed it. We're gonna close this in 6 days. So let's see if how's that gonna play out. The reason why I want to look at 2-week first today is because, okay, let us go ahead and pull out the 50 EMA. So the 50 MA right now, we are sitting at, if we zoom closer, we are sitting at around $85,000 for BTC. And one thing very interesting for the previous candle, so the previous 2-week candle, we actually managed to found that as support. So we closed above the blue line being the 50 moving average here. And this week, all eyes on this 2-week candle. The reason why this is important, like first of all, this pattern looks like is kind of slowing down for me. So judging from this candle alone, so this 2-week candle alone, this doesn't look like a particularly strong candle. Of course, we're closing that in 6 days. It's a little bit early to judge, but like judging from this structure and the pattern alone for this weekly candle, 2-week candle, looks like it's losing a little bit of steam. And if we zoom out, and since this is a downward movement, bearish movement, and if we have this candle losing the steam, that means very likely we're just going to chop around instead of like going straight down. Because what it looks like to me is that there are basically two scenarios very possibly to play out. Like from a technical standpoint, this is no way we are in a bull market. We have, I'm one of the few analysts out there that call a bear market early. And that wasn't a popular opinion. I know because I got some heat from the comments. So anyways, looks like from a technical standpoint, okay, if we drop from 126K all-time high, and if we take the low of 80K, that is a 36% correction. And that is the definition of a bear market. And not only that, we have 2 weekly candles actually closing below the 50-week moving average. So that means AKA a bear market. So there's no argument there. I really don't know why there are so many YouTubers are still buying altcoins and still saying that, okay, since the macro tailwinds, we are still heading for a better place. But judging from a TA perspective, yeah, it's looking, of course, like we have confirmed that we're in a bear market, but like this downward movement maybe is losing a little bit of steam. Of course, we're gonna have to pay attention to in the 6 days. So whether we're gonna close above this, like if we're going to find support on the 50 MA for the 2-week chart again. So basically, there's just like two scenarios. So scenario number one is that okay, let me remove this. Scenario number one is that if we find support because like this weekly candle looks like it's losing the strength. So if we find support, maybe we're just going to chop around and consolidate a little bit. In other words, trade sideways in the coming weeks. So this is scenario number one that I see from here. Again, since we have to wait for the confirmation in 6 days. But judging from this candle alone, looks like the probability is higher. And then the second scenario is that we're gonna even drop below the 50 MA, so there'll be more pain to come. I don't see a bullish setup from this chart. Again, like I know QT has officially ended and we have the confirmation from Jerome Powell. But one thing I hate to break it to you guys is that let's actually pull up the Federal Reserve, the balance sheet. So one thing I hate to break it to you guys is that even if we have ended QT, this doesn't mean we're gonna go up, and it doesn't mean we're gonna go sideways. So sorry about the drawing. So it doesn't mean we're gonna go sideways. It doesn't immediately go up because the last round of treasury maturities did not settle until quite some time. So in other words, if we want to see this balance sheet of the Federal Reserve to go sideways, I'm not even talking about go up, but like go sideways, it might take like a few weeks for us to see the effect. So in the near future, there is a chance that the balance sheet would just like go down and dip a little bit before we actually see the effect of the QT ended kicks in. So looks like there's still more pain to come, and this is only on the 2-week chart. So if we also hop onto the 1 week, jumping from a longer perspective to a shorter perspective. So on the weekly, the chops and the consolidation theory still aligns very much. And especially if we pull up the Ichimoku cloud, so I have to close that every single time I have to open indicator. So if we bring up the Ichimoku cloud, so here is this indicator. It kind of looks like a cloud, right? What this does is essentially the support and resistance region we need to pay attention to. So how do you read this thing? So basically, it's really easy, and especially it works the best on the weekly candle for the Ichimoku cloud. So if the Bitcoin price is actually above the cloud right here, like we have been above since October 2023, and only recently, so only in like November this year, we found support, and basically we're just like trading inside the Ichimoku cloud region. So if the price is above the cloud, that means it's a bullish momentum. The bulls are in control. However, if the price is actually below the Ichimoku cloud, so right here, the cloud is on top and then the price is sitting below, this is a bullish setup, so a bearish setup. So the bears are in control, vice versa. So one thing very interesting is that it's a first of all, the Ichimoku cloud is a leading indicator. It works really well as in telling which region we are in right now. So if we zoom closer, we are inside this region. So it looks like, okay, we might be consolidate a little bit, but the top band of the Ichimoku cloud, so being right here, that is like a major resistance for Bitcoin price. So in the coming weeks, I won't be surprised to, okay, Bitcoin might bounce up a little bit, maybe even to 100K. How about that? And then we got rejected again, and then basically built some data inside this Ichimoku cloud. The reason why I would say this is because if we zoom out and if we go all the way back to January 2022, so that was the bear market, right? So if we zoom out, and December, that was the time we kind of used the Ichimoku cloud as support, and then boom, in January 2022, we finally got a trade inside this region. That means, okay, maybe the bulls are finally out of control and bears are here. So for the last cycle, we were trading inside this cloud for 91 days. So in other words, like 3 months. So usually, even for a bear market to start to begin, it doesn't go straight down. So like similar to last cycle, we didn't go from 69K all the way down to 15K. Like we will have like chops like this. So using the Ichimoku cloud as consolidation, a little bit like a bounce back up, that kept bounce. That's what I call. And then we're going to drop even more, and then even more slowly grind down. One thing I find it really interesting in the market sentiment is that it looks like people are in their denial phase. This is very typical for a bull market or bear market. This is just the psychology of a market cycle. So if we look at this pattern, it looks awfully similar to here. So like people were saying, okay, we're gonna head to even higher places, like Tony saying at least 150K this year by year end. And then turns out we only got to 126K. And then if we hop to this pattern, it looks like, okay, this is the new paradigm. Like Bitcoin is in a new cycle. We're not going to see volatility anymore now that institutions are in. But like what happened over the past few weeks is that, okay, we kind of reached the all-time high, the cycle top, and then we had a dead cat bounce. And I warned about the dead cat bounce for weeks to my community. And yeah, it looks like it aligned with the denial phase, because if we hop onto Twitter, people are still really bullish for some reason, where the 4-year cycle, it looks so intact, and we have the magical number of 1064 days, being each cycle bottom to each cycle top. The length is about 1064 days. So I don't know what these people are on about, when it, like, all the compelling evidence is right in front of our very eyes, and yet people are still denying that this is a bear market. And I mean, bear market is not bad, because like what it means is that we get to buy Bitcoin cheap. So let's close actually, let me close the Ichimoku cloud, because there are too many indicators on my setup. So let's close the Ichimoku cloud and bring out the SMA again. So let's close the drawing. So what it means for a bear market is that there are two lines here. So the blue line and the red line. The blue line is the 50-week moving average, whereas the red line is the 200-week moving average. So for a bear market, usually Bitcoin would find support at the 200-week moving average. So that's what happened. That was back in the bear market in late 2018. Again, here, that's what happened in 2022. So right now, the 200-week is sitting at around 56K. Of course, it's not a straight leg down, and Bitcoin's not going to immediately reach the 200-week. There will be chops, slowly go down, and then people will be in the denial phase yet again. But like, judging from a TA perspective, like there are a few criteria. Like first of all, the 50-week moving average being the blue line at above, like we need 2 weekly close below. And yeah, I mean, if we zoom closer, we have already got there. So that's one confirmation. And then the second confirmation was the Ichimoku cloud. So we're inside the Ichimoku cloud. Looks like it's a consolidation period. So it's going to be chops, and it's going to be quite boring in the coming weeks, in a near short term, basically. And then third confirmation that I got looking at the charts is that we are actually below the 108K. Why do I talk about 108K? So this is a critical level that I gauge whether this is a bear market or bull market. Technically speaking, anywhere below 108K, it is a bear market. Okay. The reason why is because 108K, it was the previous all-time high. So we have been finding 108K as resistance. That was back in December last year. And here again, it acts as resistance, but here it turns into support. So the prior support is going to be our future resistance. So point being, since 108K is a interesting level, because there's a lot of price data point around this 108K, if Bitcoin trade below 108K, that is the third confirmation that I have that this is a bear market. But like, I'm not concerned, because like, if we manage to scoop up BTC at 56K, of course, like this gonna slightly catch up. So maybe by the time Bitcoin done the correction, it will be like around 60, 61, 62K, something like that. But like, that would be another around 30% correction. And according to the 4-year cycle, if we if we measure the bear market, it's usually 365 days. So that means we're going to find a cycle top in October 2026. So looks like everything is actually aligned. So both 2-week and weekly, it aligns with the denial phase that people have on crypto Twitter. And let's also hop onto the daily candles, and we slowly build up that. Go to the shorter time frame and see what's going on. And this also happens to align with the thesis that I have, being that we are officially in a bear market. So, um, fourth confirmation is this general trend line. So we have been trending down since 126K. And ever since we're just like finding this trend line as resistance, like we keep getting rejected, like here on 11th of November, we didn't even technically touch the trend line. So that's more weakness I see from a TA perspective. So if Bitcoin, okay, if I'm so wrong with my TA, that means like I need to see Bitcoin. First of all, we need to trade above the 50-week moving average. Second of all, we need to be up the Ichimoku cloud on the weekly chart. And third, we need to get out of 108K, that magical number. And then fourth, we need to close above this general trend line. So for confirmation I have, and yet people still don't believe that this is a bear market. I seriously, I can't wrap my head around. And looks like the market is leaning towards the bear. And I know there are macro tailwinds, liquidity is unlocking, but that's really not what I see from a TA perspective, and especially in the coming weeks. Like, we still have to wait for the 2-week candle to close because it's going to close in six days. And so far, we don't know if this is going to basically close above the 50-week or 50 MA or below the 50 MA. So if we close below, there's going to be more pain. So forget about consolidation, because like if we find support here, there might be some chops and we'll trade inside the Ichimoku cloud a little bit longer before there's more pain. So if we close below this line, it's going to be like, yeah, it's going to be a lot more downward movement. Like one thing very interesting I could share is that yesterday I was having dinner with my friends, and then they were asking for my opinion because they know that I'm good at risk management and I have a few short positions in is so they were asking, is it a good time to short Bitcoin? And yesterday during dinner, Bitcoin was crashing, and I told them about the short positions that I've had for quite a long time. So they were like, since Bitcoin from yesterday, it crashed down to 83K. Is it a good time to pull a short position for, it doesn't have to be Bitcoin, altcoins, maybe, because I'm really bearish on altcoins. I think altcoins going to take a lot of pain, especially during this cycle. And this cycle is so weird because we didn't see a full-on alt season. So they were asking for my opinion. And I was like, it's just wait a little bit. Like, looks like 83K. It was like, there was too much FUD in the market, too much uncertainty. So maybe wait around a little bit. Right now, we're sitting around 86K. But okay, let's see if we're going to find support here. Like, again, there's no way it's a downward only. We're going to see chops around. And yeah, like right now, maybe if you guys weren't early enough, because like over the weekend, a really good entry point that I saw just basically just 3 days ago, like we pumped to 93K, and I've talked about a dead cat bounce to my community like more than 10 times. And over the weekend, I saw a good entry at 93K. So that was a good opportunity. But like my friend asking me about this yesterday while Bitcoin is sitting at 83K. That's why I asked my friend to stay out because like he's not like very early and the entry price is not like very optimal, then sometimes the best decision to do is basically not to do anything. And especially if you guys are not like stay alerted to the market constantly, then maybe no actions is the best action. And yeah, but even though okay, do whatever you need because I'm not a financial advisor and I don't know about your financial situation. I don't know what sort of commitment you have, what sort of obligations you have. Maybe you have to pay your rent or your mortgage, or you have to, I don't know, got parents to support. So I don't know your situation, just the risk based on your needs. Like, do you need that money around for the next few months? If so, it's a good time to de-risk a little bit. Like, personally, I have a few short positions going on, but again, when it comes to shorting the market, the entry price is very important. So I'm not advising you guys to do anything. Do basically markets like this with volatility so high, maybe sometimes do nothing is the best alternative. And even if you short the market, stay away from leverage. Like don't touch leverage at all. Like even for the past 24 hours, it's very common to see in the crypto market almost $1 billion get liquidated on a 24-hour basis. So it's very common for crypto folks to experience this, and I don't want you guys who are watching this channel to experience a liquidation in your life because it's really not fun talking from my personal experience. Well, anyways, that's a lot of data. Of course, the next part of the show, we're gonna look into Japan because there's a lot of FUD in Japan about the carry trade, and the Bank of Japan gonna raise the interest rate again, and people can't do carry trade and basically borrow really cheap money and YOLO into different markets. So let's take a 3 minutes break, and after that, we're gonna look into what's going on in the Japanese market.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the center of the planet moved to Wall Street. Today, we're traveling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back. As I promised before we hit on that little break, we're now going to take a look at the Japanese market. So how the Japanese carry trade kind of wrecked the whole world, and the global market was experiencing so much volatility. Despite that, we have confirmation QT has ended from Jerome Powell. So without further ado, let's hop on to the first title that I've got here. So what happened is the Japan Central Bank. So Bank of Japan just dropped a big hint that they might raise interest rates at the 19th of December meeting. The governor said that the bank will consider the pros and cons of a hike, and markets immediately reacted. Rate hikes odds, if you jump onto poly market, there's a huge jump. So so basically here on well, where is it again? So on 19th of December, the probability of us hiking the rate for 25 basis point, we have a huge jump. So just last week we were sitting at 46%, but right now 82% of people think that we're going to get a rate hike. So poly market is usually quite spot on with these kind of stuff. In terms of the Japanese bond yield, so let's take a look at this picture. For the Japanese bond yield, it spiked to a level that we haven't seen ever since 2008. So it's been quite a while. And of course, the Japanese yen strengthened quite sharply against the USD as well. This all happened because Japanese economy is looking stronger than expected. So wages are rising, Q3 data was robust, and inflation is closer to Bank of Japan's 2% target. And the reaction yesterday, it was quite instant. Like the Nikkei, of course, that's been the Japanese market, struggled a little bit when this news broke, and Bitcoin dipped below 85K as well. So like this is why the news is suddenly everywhere. So why the markets are panicking so much in a major fund. Like this is triggering FUD mainly because of one thing, the yen carry trade. So here is a diagram that is very easy to understand. So basically for years, global traders would borrow Japanese yen at ultra low interest rates and use that money to invest in higher yield assets, maybe in US stocks or even US bonds because they have higher rates than the Japanese bond, or maybe some of that money would flow to crypto. If Bank of Japan hikes rates, funding costs rise, and these borrowers are forced to unwind positions. So, in simple terms, what this means is that borrowing becomes expensive and traders would have to repay loans. What they would do is that they would dump assets so the market would fall down even further. This unwind can create a chain reaction, especially in high risk areas like tech stocks and crypto. We already saw like over $200 billion wiped from crypto market. There's forced liquidations, huge volatility across equities. And the fear is not just about Japan. It's about whether this triggers a global liquidity squeeze. And actually, this fear is not new. Like we have been through that. We lived through a very similar event back in August 2024 when Bank of Japan out of nowhere like unexpectedly hiked rates and the yen spiked. But what happened next is that, of course, the Nikkei, being the Japanese stock market, crashed 12% in a single day, and global markets like global stocks also tumbled. Crypto, of course, took a massive hit, and this left a scar on traders, and many still remember the damage because if you think about it, it's just like not that long ago. That's why even a small hint from the Bank of Japan causes a lot of fear that we saw yesterday, and kind of like we are recovering a little bit. And for this time, 2025, it might be different. Like this time isn't exactly the same because Bank of Japan actually came out to tell people the move, and the Japanese economy is actually stronger now, and inflation is constantly near 2% level. US rates are higher, so the interest gap isn't as extreme, but there, of course, still risk remains. So a stronger Japanese yen could pull money from the US ecosystem, and Japan's bond market is really fragile. The AI-driven markets remain sensitive to shock. So if you ask me, I personally expect a partial unwind, not a full crash, unless the Bank of Japan hikes more aggressively than expected. Right now, we're just pricing in 25 basis point hikes. So, one thing about Japan is that because we talk about Japanese yen and US dollar quite a lot, because like this is a concept that we constantly have to put that in mind. Because if we look at history, so Japan, everyone just like talk about Japan's lost decades. Like if you didn't know, basically this is the context. Japan was the world's rising star. That was back in the 1980s. Like they had booming exports and tech innovation, and the stock market was doing ultra well. Then it came the Plaza Accord. So a Plaza Accord was an agreement signed in 1985 by finance ministers from France, West Germany, Japan, UK, and US to devalue the USD relative to the Japanese yen and the German currency as well. So what this led to was a massive asset bubble in Japan and a huge crash in the 1990s, decades of deflation and really slow GDP growth. Like in other words, like the West came together, and especially the US, they came together and they wrecked Japan's economy for a decade. So this is what it means. This is why Japan became the world's biggest funding source, because money was extremely cheap to borrow. So if they end up gonna rate the interest rate for 25 basis point, it's going to be of course, a full impact on the global markets, not just crypto, of course. So from a macro standpoint, what a rate hike from Japan, it means that it's going to tighten global liquidity. So borrowing costs rise globally and capital kind of flows back to Japan. Emerging markets might face more pressure. For stock market, of course, this is not good news. So the MAP7 or US stocks going to hit first for sure. And then slowly the Japan Nikkei index could fall a little bit more. Maybe it will affect the S&P 500 as well. Like long-term, higher Japanese rates can stabilize Japan's economy, but the transition is quite bumpy. Whereas for Bitcoin and for crypto, Bitcoin behaves like a leverage tech stock during liquidity shock. So in the short term, like as we were spending like the first half an hour doing TA, like it's very possible to drop below 80K. Like I wouldn't be surprised in when especially we have the rate hike on 19th of December. So let's see how that plays out. The Bank of Japan isn't just another central bank. When Japan shifts policies, it shakes global liquidity, risk assets, and especially Bitcoin. This potential rate hike is a major macro event, not because of Japan alone, but because of massive yen carry trade that links Tokyo to every financial market in the world. So, of course, let's see how this plays out. When we get more updates, the first place are going to break to, of course, is going to be Roxham TV. So stay tuned. Let's move on to the second part, like second biggest part. Let's just get all the negativity out of the way. So the second biggest part is MicroStrategy. So what happened for MicroStrategy is that they are facing one of the most dramatic moments in their history. What happened yesterday is that the market cap for MicroStrategy is, for the companies I'm talking about, okay, is around $45 billion. And as we know, MicroStrategy holds 650,000 BTC in the balance sheet and is worth around $55 billion. So what this means is that the company is now worth less than the Bitcoin it owns. This is called a NAV, so NAV inversion, when market cap falls below the value of its assets and is extremely rare. This matters because, okay, MicroStrategy, first of all, has crashed 57% from its October highs. At the same time, Bitcoin is in a confirmed bear market. This inversion is a sentiment signal that investor confidence is breaking. So how did we get here? Like if you guys didn't know the full context. So since 2020, MicroStrategy shifted from a software firm into a leverage Bitcoin holding company. They issued debt, they sold equity, and they used every rally to buy more BTC. This worked brilliantly well during bull run. So the market cap would trade maybe 2 to 3x at the value of BTC they held. But the music stopped in right now, so November 2025 or December, when Bitcoin crashed 30%, more than 30%, and the crypto market lost more than $1 trillion. And other risk that MicroStrategy is running into is that they might get excluded in the MSCI index. So that would trigger another multi-billion, so maybe $10 billion for selling. All of this, what it does is pushing MSTL's valuation below the value of its BTC treasury, flipping the premium into a discount. So, another thought that I saw is that the CEO right now are saying that like selling Bitcoin is on the table. Like this is a big question circulating on crypto Twitter. Like, are they gonna sell the BTC? Okay, long story short, fact check. No, they did not announce that they will sell the BTC. But what's true is that the CEO did say BTC sales are a last resort. Like he clarified that the sales would only happen if the stock trades below the value of BTC holdings. So that checkbox has been ticked. And second scenario is that capital markets freeze and they need cash for dividends on preferred shares. But MicroStrategy also made two moves to calm the market. So they built a more than $1 billion worth in cash reserve to avoid selling BTC. And they bought 130 BTC in December just to show conviction. They also confirm no margin loans or like no automatic liquidation triggers on the debt. The viral like MSTL forced to sell at like 80K, those rumor is false. So that's good. But like it's undeniably the whole DAD trend, so the Bitcoin treasury companies trend, is looking weaker than ever. Because one thing about the whole Bitcoin treasury companies is that they are leverage play. Like the crash this year in 2025, it exposed a weakness. So companies buying BTC at tops, like if we scroll down the list, there are more than 100 companies copying MicroStrategy playbook, and they got in later than MicroStrategy. A lot of them they bought at the top. And there's overuse of debt and dilution, BTC crashing, and right now the narrative of being a hedge against global risk looks like is not intact for the time being. Okay, so the narrative quickly flipped from corporate Bitcoin is the future of finance to all these companies, they use excessive leverage and dilution. That's why it amplifies the downside of BTC. It amplifies the downside of these stocks. This is why treasuries like MicroStrategy get hit really hard in a bear market. So why MicroStrategy is a leverage Bitcoin play. So think of these companies, or okay, maybe MicroStrategy in particular. It's like Bitcoin with leverage. This happens because they issue debt to buy more BTC, they dilute shares, and they have fixed dividend obligations. Their business is very much tied to BTC price. This is why MicroStrategy stocks is more volatile than BTC itself. Can MicroStrategy survive multi-year bear market? Historically speaking, leverage BTC companies struggle really badly. So for miners like Mara Holdings or Riot, they would fall like 80 to 90% in bear markets. And a lot of like Bitcoin miners in the past actually went bankrupt just because they can't survive the bear market. But like out of like all the major Bitcoin lever companies, I would say more than half of them would not survive a 2026 bear market. It is what it is. But however, if you ask my honest opinion, I do not think MicroStrategy is one of them. So I think MicroStrategy very likely to stay, even though we experience a multi-year bear market, which I think is unlikely. And the reason why I would say this is that if we hop onto the annual revenue of MicroStrategy, so MicroStrategy actually, they consistently making more than $400 million annual revenue every single year from the software business. It's not revenue from selling Bitcoin. It's just like the core business alone. So this is the constant cash flow and the buffer room, the cushion for MicroStrategy compared to a lot of these copycats that you see on this list. So that's reason number one. Reason number two why I think MicroStrategy would be okay is that okay, they use the long-term unsecured debt, but if you look at the maturity dates, it's not gonna come true until 2027. So in other words, there's still some buffer time, some cushion another cushion for MicroStrategy. And that reason I mentioned that, I touch upon that a little bit, is they have a more than $1 billion in cash reserves. And fourth is that they are holding a massive amount of BTC, so 650,000 BTC. And they bought in, the average cost is like 70 something K, so 74K per BTC. And they hold like 3% of the entire supply. So I'll say the survive rate, the probability for MicroStrategy is more than 90%. So I'm not really worried if MicroStrategy can't make it for this bear market in 2026. But what I will confirm is that the stock volatility is really, really high. And for trends like this, so let's go back to the list. Like, I think many of these companies we've seen today is not going to be around. It will flush out, and the NAV compression, so NAV compression, is just part of the system. Yeah, this is just how the world works. So MicroStrategy, it is like Bitcoin on leverage. So when Bitcoin bleeds, it bleeds harder, and when markets panic, its valuation can fall below the value of BTC it actually owns. The real question now is whether the MNAV, so the NAV discount, is a warning sign or a rare opportunity. Yeah, I mean, let me know what you think. Okay, what we're going to do right now is actually take a little break before we hop on to other news, because like another really stubborn TradFi player who has always been against crypto and BTC, they're getting in. So that's interesting news. That's some bullishness. But right now, let's take a 3-minute break, and I'll see you guys in about in a few minutes.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
He's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
All right, guys, welcome back. As I promised, we're now gonna look at some stubborn TradFi player actually getting into the Bitcoin play. Who am I talking about? Is of course Vanguard. So Vanguard is the second largest asset manager in the world, with over $11 trillion in AUM. What happened is just they announced they will finally allow its clients to trade selected crypto ETFs and mutual funds starting as soon as today, so 2nd of December. This is a massive shift because Vanguard is one of the most anti-crypto firms on earth for nearly a decade. They blocked Bitcoin ETFs, they refused Ethereum exposure, and they repeatedly called crypto speculative and unproductive. And right now, 15 million of Vanguard clients will gain access to regulated Bitcoin, Ethereum, XRP, and Solana ETFs. This doesn't mean Vanguard has become a crypto believer, but what it means is that TradFi resistance has really officially collapsed. So if you guys didn't know, because like throughout the history of Vanguard, they used to hate crypto so much. They are saying Bitcoin is just a gamble. It's not suitable for long-term portfolios. They even block access to Bitcoin feature ETFs and rejected spot Bitcoin ETFs even after the SEC officially approved that back in 2024 last year. Even after BlackRock or Charles Schwab embraced Bitcoin ETFs, Vanguard still stayed really stubborn until now. So why Vanguard reversed the course? Basically, it just boiled down to, well, 2 reasons. First of all, there's a massive demand from the client side because like the clients just keep asking if there isn't any crypto ETFs available, they'll just move to other platforms. So this is a threat to Vanguard. Second reason is that they actually got a new CEO. So in July 2025, so this year, they appointed someone like the same executive who helped BlackRock launch the IBIT Bitcoin ETF. So looks like his arrival kind of changed everything. So those are 2 main reasons why we have a massive shift. So what Vanguard will allow, of course, those legit products. So clients can trade regulated funds that hold Bitcoin, ETH, XRP, and Solana. This includes most SEC-approved spot ETFs and some mutual funds. Of course, there won't be any meme coins or leverage products, no direct crypto custody. It will be available on regular brokerage accounts and IRAs, but there's some restriction like Vanguard will block products that don't meet the risk standards, and some institutional accounts may face limits. So this is soft conservative rollout, but this is still huge because if we look at the bigger picture, their reversal is not about belief, it's about inevitability. Like for 10 years, crypto fought for recognition. Now, the world's most conservative investment giant is opening the doors to us. This is a historical moment because BlackRock, or Fidelity, or Charles Schwab, and Vanguard, they completed the TradFi adoption, crypto becomes a standard asset in retirement portfolios. And I'll say, even though right now we're in the bear market, looks like it sets a stronger foundation for the next bull run. So I'm eyeing 2027, since the bottom likely gonna happen in Q4 2026. But yeah, this is a really good signal that I've spotted, and digital assets have really entered the mainstream, which I like. Let's move on to the second news I want to cover. So the second news is that Yearn Finance. I don't know if any of you guys used that before, but it's quite an OG product. It's one of the oldest and most respected DeFi yield optimizing protocols. However, they suffered a security breach that resulted in $9 million stolen from its legacy YETH pool. This pool was tied to liquid staking tokens. So in other words, stake ETF, AL ETF. That's why did I say ETF? So stake ETH, AL ETH, and CB ETH, and use custom stable swap logic. What it means, okay. And very importantly, Yearn's core forks, being version 2 and version 3, they were not affected. Only the old one, so the aging YETH pool, was compromised. So how it was detected? The first alert came from blockchain security from PackShield on basically yesterday, who noticed funds being drained in a single suspicious transaction. Yearn Finance immediately formed a war room with engineers from SEAL 911 and Chain Security to investigate the damage. Early findings show the attack resembled the Balancer V2 hack, highly technical and targeting custom written code used in legacy pools. So this is Yearn's third major exploit since 2021, further highlighting a recurring pattern in DeFi, like the older smart contracts usually involve higher risk. And how the exploit happen? Well, first of all, there's a vulnerability. So the root cause was a unchecked bug inside the YETH pool's minting logic. Because the code didn't validate the amounts of tokens being created, the attacker was able to mint an almost unlimited number of YETH tokens. And this is called a infinite mint exploit, a classic DeFi bug that happens when a contract fails to force balance checks. And the attacker basically created a huge amount of these fake YETH without depositing any real collateral, just empty tokens created out of thin air. This instantly inflated the pool's internal balances. Using the fake YETH, the attacker entered Yearn pools and swapped the counterfeit tokens for real ETH and the real staking derivatives. They managed to drain almost 1 million from YETH versus Wrap ETH stablecoin pool on Curve, and then another 8 million from the custom YETH liquidity pool. So a total of $9 million being stolen, all done with one transaction, making it almost impossible to intercept. And after the theft, so the attacker sent those 1,000 ETH into Tornado Cash, so to hide the trail. The remaining $6 million stay in the wallet. So this is a typical post-exploit pattern seen in DeFi hacks. So what Yearn Finance took place, how they responded, is that they quickly coordinated with multiple DeFi partners to assess the damage and initial recovery. So far, Yearn Finance and the partners successfully recover about like $2.4 million worth of tokens by neutralizing the attacker's PAX ETH exposure on chain. All recovered assets will be distributed back to affected depositors. So recovery is ongoing. More may be saved depending on the exploiter's remaining on-chain positions. So if you guys are affected, like if you guys use Yearn Finance or you had any funds in the legacy Y ETH pool, just go to Yearn's Discord and create a support ticket and wait for the official reimbursement process. The recovery team is actively tracing exploiter positions. Just like, yeah, if you guys are affected, then go to Discord. Yeah, I hope you guys are not. But like, okay, let's move on to the last piece of news I've got for today. So it's about Trump. So Trump Media and Crypto.com. So Trump Media, the owner of Truth Social and publicly traded under the ticker DJT, so Donald J. Trump, is partnering with Crypto.com to create a new publicly listed company that will hold a massive Chrono, so CLO token, the crypto treasury. So they're going to turn CLO into a treasury company. This new entity is called the Trump Media Group CLO Strategy Inc. The ticker is MCGA, so Make Crypto Great Again. The deal is moving through regulatory steps now and is expected to close maybe in Q1 2026. This is one of the most politically charged crypto partnerships in US history, combining a Trump-linked media company, a major crypto exchange, and a SPAC structure to take CLO treasury public. So how did this partnership started? Well, Trump Media and Crypto.com began working together earlier in 2025. So the company actually acquired 684 million CLO tokens, Truth Social integrating Crypto.com wallet features, and there's also acquired internal plans to build crypto-related products. And by Q3 this year, the company also reported a $3.1 billion in assets, including large CLO holdings and Bitcoin holdings, even though the company posted a quarterly loss. So it's actually a very big step for CLO, of course. The parties signed an agreement to form a new public company holding. It's going to be 1 billion CLO tokens plus $200 million in cash and other securities. The treasury will focus on CLO staking, running validator nodes on Chronos, support Truth Social crypto features. This is similar to MicroStrategy Bitcoin strategy, but instead of BTC, they focus on CLO, of course. So, question, why these two companies are doing a partnership? What's the linkage here? Well, turns out it's more political than ever because Crypto.com donated millions of dollars to pro-Trump causes. Trump has positioned himself as a pro-crypto president since 2024. So him partnering with a friendly exchange makes strategic sense. So there's a lot of political synergy between the two. And Truth Social is integrating Crypto.com's wallet infrastructure and also a new prediction market called Truth Predict powered by CLO. Crypto.com benefits from expanding CLO exposure to more than 10 million of Truth Social users. So it's a win-win situation for them. However, if you ask me, if I'm gonna ape into like anything, maybe Donald Trump's company or CLO token, like of course, like CLO, this is a really bullish setup. They benefit from the publicity or the treasury demand and the linkage with the Donald Trump name. It's more like basically a lot of exposure. But if you ask me, based on Donald Trump's track record, based on Trump media's the investment that they made, like it looks like most of the projects tied to Donald Trump is extremely volatile, and it often reacted to Trump headlines. Like even the DeFi project that Donald Trump, basically it's not Donald Trump alone, but the Trump family, like I didn't I was telling and warning my community about it, and it looks like it's another good decision that I leave that out because I saw like basically many YouTubers were shooting that thing to the moon because it's completely tied to Donald Trump's reputation. But the reason why I was bearish on the DeFi platform, first of all, even right now, the DeFi platform is still not working well. So a lot of the features are still not available. And based on the track record that I saw, looks like even the coins, maybe the meme coins, okay, all the meme coins related to the Trump family didn't do well. So the track record was really bad. So I didn't have any conviction. And that's why I warned my community about. I hope you guys watched my show from months ago. So that's how you avoided projects like this. And as for CRO, like the token price is down significantly from its all-time high, like 90% from its all-time high. But of course, like CRO, the sentiment can flip very fast. And I do like crypto.com as a product, like I used a card as well, so as a crypto person. But as for the CRO token, it's definitely high risk and high reward territory. So I'm not a financial advisor. I'm just telling you my opinion, that's all. So you guys can draw to your own conclusion. So anyways, that's pretty much all the news I want to cover today. Just last call to action before we wrap this live stream. So make sure to give us a follow on Twitter. So my Twitter handle is jamjamcrypto_io. Make sure to follow Roxham TV as well on Twitter. So it's going to be at Roxham TV because we have regular updates, not only about Bitcoin, but about, yeah, we have Apple, about AI, about global, so all the global markets. So make sure to give us a follow because we are updating valuable content every single day, actually every half an hour or something. So anyways, my show is from Monday to Friday starting at 3 a.m. Eastern time. I'm extending my show from 1 hour to 1.5 hours. So make sure to follow us, and my live stream is available on both Jam Crypto YouTube channels and my own YouTube channel, and also on Roxham TV YouTube channel. If you don't manage to catch that live, don't worry, the replay is also available on both channels. So thank you so much for watching. I hope you guys have a fantastic day wherever you are, and I'll see you guys in tomorrow's show.